Aloha. Thank you for joining me for Java. It is September 3rd, 2024. It's Tuesday morning. We've got quite a bit to go over, even though it is a short week. There is quite a bit to consider today, and I've got a couple of extra things that I would like to put up for you to perhaps think about. So, with this, let's get started right with what's opening today in the markets. So, with our favorite risk indicator at the moment, these are a little bit level because the market's not really open yet. We've got the MMRIs at 247, which is kind of where it was, and the greed meter, basically fear greed, still deep in the greed zone. However, we've got a couple of changes that have been happening. So the first, the elements of these, of course, the 10-year yield is rising. Now, as this goes up, it will tend to put pressure on the stock market as well as the relative strength of the dollar. Now I've got more of the currencies again here because as I was speaking about yesterday for the opening for the week, one of the larger things that it seems like no one else is watching is the flow between the currencies. And I think this is going to be very important very soon. And you can see, as I said before, it works kind of like a seesaw. So as these two go up, the 10-year yield and relative strength of the dollar, they will put pressure on all of the others. And I suspect after open will also put a bit of pressure on the stock market unless there is a change with these. So this is just showing the flow of money that's going on in the background. I think a lot of that is basically quantitative easing that is going on in the background where they're manipulating these. However, with this going on, we've got oil under a bit of pressure today, not too much going on as far as with carriers. We've got gold in the green and the volatility index on watch. Futures are not in agreement. They're kind of reflecting what is going on with the 10-year yield and the dollar. They're showing a bit of pressure coming into play a little bit later. We've got cryptocurrencies back up above the 58,000 level for Bitcoin. It's showing its strength here. So if it can hit through the 60,000 level as major resistance. So I think it's going to hit there. We'll see what it does if it pulls back. So a couple of other things with this. We've got the Treasury market is waiting for the start of a 4-day data dump. They're talking about all of the reports we expect to be pouring in, and I'll go over those for today. But as it was for yesterday, we've still got volatility. We are watching the jobs still, and it's September, which is seasonal weakness. So as I said, we're going to keep an eye on some of these currency moves in the background, in specific Japan. Go over that in a bit. So we've got in the background, central banks around the world are buying gold at record levels still, but Bitcoin still staying strong. So talking about cryptocurrencies, but the larger point is that central banks are moving into real assets. They are moving out of these stocks basically and strongly into the precious metals sector. And so I think basically it would be a wise thing to do so as well. So that's what I'm doing. Okay, our earnings that we're expecting coming out. This is before open Tuesday and afterwards. And this is prior to open on Wednesday. So if you've got any movement in these stocks, specifically Dollar Tree, we'll be watching. And this is for the lower end economy, so to speak. In reality, the spending there will tell us the health of the consumer on the lower end. And we're watching this dichotomy spread even further. Okay, so now with the calendar, I want to speak a little bit about some of these reports we're getting. Now, PMI used to be the larger weighted report for the Federal Reserve because it's for the inflation. However, it's taking more of a back seat. So getting PMI, construction spending, manufacturing today, and then tomorrow prior to the market open, U.S. trade deficit. Now, I want to speak about that for a moment as well. Now, this is up from last time. The last time the trade deficit came out, rose sharply to its highest level. Now, this is another major indicator that the United States now is in a severe imbalance with a lot of our suppliers. So with this will also fluctuate with the currencies, and we'll see that move through the markets as this week moves on. And I said I wanted to speak about Japan a little bit more. And here it is. So we've got Ueda, who is the governor, their central bank head, reiterating that the Bank of Japan will lift rates if outlook is realized. So basically, he's leaving the door open. They've got weaker yen right now. If the dollar continues in strength, then they are going to hike as well, basically looking at manipulating their currency further. They've already been warned about this prior, but this could shake some of the markets if you remember a few Mondays back when they did this. Now, this yen carry trade that now everybody is talking about is nowhere near unwound. They've basically done two sections of it, which is only scratching the surface, to be honest with you. Okay, a few other stories on movers that will happen today to keep an eye on. The first is Amazon. Now, I've been speaking about them before. They are massively pouring money in development into a couple of sectors, but mostly artificial intelligence and their data centers. Now, their data centers and processing for their Amazon Web Services is very quietly growing in the background. So I would just like to kind of put that towards the long-term growth of this company. And Alexa, now, if you have a business on their cloud service, you get to work with Alexa, or she is the voice that you hear. Okay, I want to talk a little bit about this in a moment, but first, Mt. Gox and US government could introduce $15 billion of Bitcoin selling pressure. Now, I just spoke about how it's about to reach some resistance level at 60,000. If they chose to do this, this could push down the price of Bitcoin significantly. However, short term, and I believe that they would do something like this in a play to get more people to sell out of it for multiple reasons. One of the large ones, I'm going to talk about it right here, and this is about banks facing new risk from permissionless blockchains. Now, this is a warning from the Bank of International Settlements, BIS. They are the main of the bank. If you haven't heard about them, they are the central of the central banks, and they basically are the coalition at the top that work in secrecy. So, to mitigate risks, this is what they're saying, associated with public blockchain networks, the paper proposed appointing an entity with the authority to, quote, control and limit access to cryptocurrency assets. Why would they do this? Because uh, free permissionless blockchains are decentralized and they work outside of the banking system. So all of this risk that they're talking about is to them, and they don't like it. They don't have control. They can't tell you how to transact, what you're allowed to hold or what you're allowed to purchase, or in some cases, track you. And they don't like this. So I want to bring this up. This is escalating very quietly in the background of blockchain news, specifically with cryptocurrency. How's our real economy doing? I'd like to speak about that for a moment. So, first off, it is basically across the pond, but what is going on is now global. So, keeping that in mind, we have to consider what is going on with the other markets. First off, I'll talk about Volkswagen. The reason being, they have just opened multiple plants for production in China. Now, they're canceling a no layoff pledge that and they're also saying they won't rule out closing plants in Germany specifically. So, what does this mean? They're cutting costs because producing in China is much lower than in Germany, mostly due to labor. Okay. Now, they're saying that the auto industry headwinds mean that it can't rule out plant closings in their home country, and they must drop a long standing job protection pledge, which has been enforced since 1994 and would have barred layoffs through to 2029. Now, 2029 is within 5 years from now, actually 4. So if the heads of Volkswagen don't think that they can hold through another 4 years, that they have to close plants, it's very eye-opening. And this very quiet story in the background. Okay, we've got more persistent economic pressures, changing consumer habits, and basically it's causing more closures of restaurants, lower financial and spending, and as well others. We've got artificial intelligence troubles in MasterCard laying off 3% of their workforce. So, all in all, the basically the labour market, watching the unemployment rise, it's been speaking about this, has to go to real levels. They're saying it's roughly around probably between 5 and 7%, depending on the country right now. I think the real unemployment rate is much higher, probably around 12 to 14, watching shadow stats. So, how do they manage this so people don't panic? Well, it's all in how they say it. It's all in the words and the neurolinguistic programming that they hand you with the propaganda. So, with this, we'll read this headline. It says, Spain unemployment rises much less than expected. So, that doesn't sound so bad. It's less than they expected, regardless of all the people losing their jobs, not able to pay their bills or put food on the table. So it's not about unemployment rising or that it's an issue, but that it's less than what they expected. And that is the real problem because they are not telling the truth about any of this. Okay, I just want to bring that up so you start reading these headlines and think a little more about how they're worded and what angle they're taking. So I want to speak a little bit about this. The ECB and central bank officials are to brief basically the Irish Central Bank on a digital euro. So I think this is a larger story because basically it's the euro coming into working. So it's Financial Services Ireland, part of the IBEC Employers Lobbying Group. So they're holding a forum on Friday with the European Central Bank and Central Bank of Ireland for the multi-year digital euro product. They are expecting to launch this as early as 2028. Now, it wasn't but a couple of years ago that they were saying that this would not happen. They were not looking for it. They would not implement it. Now, it's within a couple of years that they're going to launch this. So again, they're massively covering up what they're actually doing. Okay. So I've got a couple of other stories I would like to bring up before I let you go to these markets or to your day. The first is the European Union shifting back towards Russian energy. They really didn't get off of it. It's just that this is just in time for winter. They're going to have serious needs. And the only difference is whether they purchase it from them directly and they drop all the silly sanctions that is really bolstering Russia at the moment, or whether they continue to purchase through third party and pay more for their power. And this drives everything in their economy. Particularly Germany will be hit with this. And then we had the foreign minister for Hungary come out and say that they flat out can't survive without Russian oil. So moving forward, just to keep this in mind, we are watching energy dropping a bit. This is telling of a recession and dropping demand, but we're coming into winter. So all of this happening in the background, it's just a massive psyop, basically. So looking at Starlink and why I've brought this up. Now, this is all over Brazil. Now, basically, they have threatened to sanction Elon Musk's Starlink and cancel the license to operate in the country. This is because they refuse to comply with a court order to block access to X, the former Twitter platform, in Brazil after a feud with the president, basically. And he's saying the world is not obliged to put up with his far-right ideology. So he wants speech suppressed and ideas closed down. So if they do this, and I agree with this, hedge fund billionaire Bill Ackman saying that this ruling would make the country uninvestable. This would severely hurt their economy, because basically the cutting all of these freedoms of speech, and then also just showing that they could randomly shut a company that goes against their narrative without real cause, will make people pull out of the country, regardless of the resources that they have. So with this, I just want to wish you all a wonderful day in general. Green if you're trading today. And until I see you again, my friends, stay free.